If you think pricing high gives you negotiation power, I need to challenge that because in this market, it's doing the opposite. It doesn't create leverage. It creates a price to value gap. And that gap changes how buyers behave. Not because buyers won't negotiate, but because buyers don't negotiate from overpriced anymore. They disengage. Now, here's what a lot of sellers don't get. That strategy might have worked 15 to 20 years ago because back then, buyers didn't have instant access to comps. They weren't running their payment scenarios on their phones. They weren't comparing 5 similar homes side by side in 30 seconds. There was less transparency. Today, we live in an AI-driven, data-saturated world. Buyers can analyze value faster than ever. Their agents are analyzing it even deeper. Automated valuations, historical pricing, neighborhood trends. It's all right there. You're not testing the market. The market is testing you. And the moment buyers decide your number doesn't make sense, they don't work you down. They move on. And when buyers move on, you don't just lose showings, you lose leverage. And once you lose leverage, you start giving money away in price reductions, in concessions, in repair credits you never planned on. You don't lose equity overnight. You lose it slowly. And that's what we're going to break down today. I'm Lily Vallario, and I've been selling real estate in Maryland for over 21 years. And the reason I've been so successful isn't luck. It's because over 2 decades, I've learned how to understand buyer and seller psychology at a very deep level. I work with both sides every single day. And when you do that long enough, you start to see patterns. You understand fear. You understand urgency. You understand ego. And most importantly, you understand how people perceive value. And when you understand that, you can position and negotiate with precision. Today, I'm going to show you exactly why starting high backfires, what happens to your leverage after the first 2-week window, and how to price it in a way that pulls buyers toward you instead of pushing them away. Quick pause. I just want to say that if you're new here, welcome. I share straight strategic advice for buyers and sellers every week. So if that's helpful, please help my channel and subscribe. I'm working toward 2,000 subscribers, and I appreciate you being part of it. Okay, now let's start with a mistake that sounds smart, but performs badly in real buyer behavior. The outdated belief goes like this. We'll start high so we can have a little bit of wiggle room because buyers are going to want to negotiate our offer down anyway, and that way we can end up where we want to be. But buyers don't shop like that anymore. In 2026, buyers shop like analysts. They have alerts. They have saved searches. They've already toured 3 homes that look just like yours. And before they even step inside your house, your price has to stand up to comparison. Here's where most people mess up. They think a little high just gives us a little room to negotiate. But to a buyer, a little high reads as not aligned. And when something feels misaligned, buyers don't lean in. They lean out. The first trap, filters. Buyers don't search for homes the way you may think they do. They search by payment comfort, which puts them in a certain search bracket. So if your true buyer pool is shopping up to $600,000, and you list it at $625 because you want wiggle room, you didn't start a conversation. You removed yourself from the conversation. Those $600,000 buyers never even see you. And the buyers who do see you, they're shopping in a higher bracket, say between $625 and $650. So when they see your home at $625,000, a home that realistically should be positioned at $600,000, they're comparing it to the $650,000 homes that are correctly priced for that tier. And those homes suddenly look like a much better deal. At that price point, buyers expect more square footage, more upgrades, or a stronger location. So instead of being the great home that's slightly high, you become the home that doesn't measure up. You're unintentionally helping your competition sell faster because the homes priced right look like the smart choice next to yours. That's the visibility problem, and it's brutal because you'll still get some activity early on, which makes sellers think, see, it's working. We're just waiting for the right buyer. But activity isn't proof. Offers are proof. Second trap, anchoring. Your list price becomes the reference point. You don't start high. You set the story. If you price like a premium home, buyers walk in expecting premium. And if the condition, layout, finishes, or location don't match that premium story, buyers don't politely say, "No worries, we'll adjust the offer." They start auditing. They start noticing flaws they would have overlooked at the right price. The carpet feels older. The kitchen feels smaller. The backyard feels less usable. And instead of picturing their life there, they start building a case file for why they should pay less or pass on it entirely. The third trap, perceived fairness. Most buyers aren't hunting for a steal. They want to feel smart. They want to feel the price matches the condition and the risk. Because in 2026, risk feels expensive. Rates are higher than the pandemic lows. Insurance and taxes matter more. Repairs feel costlier because they are. And we're no longer in a market where values are skyrocketing every few months. Buyers can't count on a quick appreciation to fix an overpay. So when the price feels inflated, they don't want to win a negotiation. They want to avoid a problem. And that leads to the next issue, trust. Overpricing sends a signal, even when you don't mean it to. Buyers read it as maybe the seller is stubborn. Maybe he's going to be difficult to negotiate. We're going to have an inspection fight. We're going to probably have appraisal issues and they're not going to want to come down. So they conserve energy and move to the home that feels easier, cleaner, and fair. And now here's the domino effect most sellers don't see until the first price cut. Days on market becomes a narrative. A home that sits starts to feel like something's wrong, even if nothing is. Buyers wonder what they missed. They assume other buyers passed for a reason. So instead of competition, you get caution. And when you finally reduce the price, it doesn't reset your leverage. It confirms the buyer's suspicion that the number was initially wrong. Once you understand that, you start to realize something important. If leaving room to negotiate doesn't create leverage, then the real problem isn't buyers. It's seller psychology. Now let's talk about why smart, rational sellers still choose to leave wiggle room to negotiate, even after everything you just heard. Because this isn't about intelligence. It's about psychology. It usually comes down to one of four things: hope pricing, need-based pricing, attachment pricing, or what I call the highest comp obsession. Hope pricing sounds like, let's see if we get lucky. Need-based pricing is, we need this number to make the move work. Attachment pricing sounds like, but we remodeled the kitchen. Our neighbors are amazing. There are so many kids on this street. It's a perfect place to raise a family. And the highest comp obsession is cherry picking the best sale in the neighborhood, even if that seller spent significantly more on improvements and renovations. Here's the hard truth. Buyers don't pay for your plans. They pay for their alternatives. And in 2026, alternatives are easier to find, easier to compare, and easier to walk away from. So what exactly happens when a home starts just 3 to 5% high? Here's the timeline I see over and over again. Week 1 and 2, you still get attention, showings, even saves, that hopeful comment, we liked it, but want to keep looking. And sellers take that as encouragement. But traffic is not proof. Offers are proof. By week 3 and 4, the tone shifts. The motivated buyers have already picked something else. And remember, buyers don't make these decisions alone. They've hired representation, and that buyer's agent is analyzing the same data. So instead of saying to their client, let's try to negotiate, they start saying, let's move on. This seller isn't realistic. And once buyers move on, they don't sit around reconsidering. They're touring other homes. They're running new numbers. They're starting new conversations. They're getting emotionally attached somewhere else. There are too many options in today's market to stay focused on a home that feels like a time drain. And then your home doesn't even sit in the maybe pile. It disappears. And when buyers replace your home up here, they rarely come back. By week 5 and beyond, your leverage gets thin. The listing is no longer new. It's just available. And in real estate, available often reads as negotiable for a reason. Because buyers think, nobody else wanted it at this price. Why should I? Now the seller tries to correct it with a price reduction, but the market doesn't treat that like a fresh start. It treats it like a confirmation that the original number was wrong. So the offers that come in aren't clean. They're layered with inspection demands, closing cost requests, and a tone that says, you already blinked once. And that's what people mean when they say you end up chasing the market down. Each reduction doesn't just change the number. It changes your negotiating position. Here's the takeaway. This isn't about telling you to price low. It's about pricing smart before the market prices you. Because once the market starts correcting your number, you're no longer negotiating from strength. You're reacting. And believe me, reacting is expensive. In 2026, the sellers who win are the ones who combine pricing strategy, marketing strategy, and buyer psychology from day one. Not hope, not ego, strategy. Now I'm curious, if you're a seller, a buyer, or even a real estate agent watching this, what are you seeing where you live right now? More price cuts, longer days on market, buyers negotiating harder? Please drop it in the comments. I read them all. And if you're even in the early stages of thinking about selling, don't wait until the market forces your hand. If you're in Maryland, I'd love to help you personally. My contact information is in the description box below. If you're outside of Maryland, click the Find an Agent form also in the description box below. Fill it out and I will personally reach out to you so I can understand your goals and connect you with a top agent I trust in your area. An agent who understands leverage and buyer psychology. Thanks again for watching, and please don't forget to subscribe. And remember, sell smart and protect your equity. I'll see you in the next one. Bye.